Goldfields' third quarter headline earnings per share fell 28% to 165 cents as unlawful strikes disrupted production. In total, 35,000 ounces of production were lost due to strike action at KDC and Beatrix. The miner expects attributable gold production for the year to be no more than 3.3 million equivalent ounces. Goldfields ended the day 1.5% higher at just over 106 Rand. Earlier, we spoke to CEO Nick Holland on the sustainability of South Africa's gold sector.
Look, what's clear is that if we continue on the same trajectory as the last 5 years, in other words, around a 5 to 7% per annum decline in production, with costs going up between 10 and 15% per annum, anyone can work out that that trajectory is not sustainable for the industry. Thank heavens we've got the Rand gold price where it is today, otherwise this whole issue would have happened earlier. We have to change the way we run these operations. I tried 4 years ago to move to a 6-day working week with very limited success. I think we've got one shaft in Goldfields that's doing it. We have to get that on the table again. We're losing a whole month's of production because of the off Saturdays we don't work. All of our mines across the world work continuous operations. And in fact, that's the other positive, is in this quarter, all the international operations performed above or at expectation.
We're joined for more on these numbers by Peter Major, mining analyst at KD's Corporate Solutions. And Peter, this is what you do on a day-to-day basis. So give us the real situation here.
Well, Nick sums it up pretty well, Bronwyn. And I'm actually surprised that Goldfields has held up this well on the earnings. You know, I had earnings down 20%, so maybe you're looking at a different number than me. But the next quarter is going to be worse. And we always say the macros are all in our favor. We got great ore deposits, we've got the infrastructure, the gold price is running overseas, the currency's weak, we've got as strong a dominant position as any of our competitors, and we're throwing it away. And so Nick is right. We're going to slowly close all these mines like we're continuing to do the last 20 years. And we're just going to lose a fantastic asset that was put in place that could go another 50 years if we take care of it, or we're just going to close it by our own stupidity and who knows what else.
David, a very bleak picture being painted there by both Nick and by Dave.
I heard Peter earlier on in a radio interview, and he made a very good point, because as each shaft closes on a mine, it means that the fixed costs are spread across the industry, you know, across that particular group, making it more and more difficult for them to actually survive. So you've got to increase production. You've got to increase the efficiencies of a mine for the industry to continue. And you heard Nick, you know, if we continue like this for another 5 years, we have no industry.
Dead gold industry.
Well, the thing is as well, I mean, I also heard the interview earlier, and as Peter was alluding to, the problem is that your next quarter figures are going to be much worse. The October numbers are going to be reflective of that massive strike action. And he's estimating up to 145,000 ounces, which is 5 times the 35,000 on this number. So it's going to have a dampening effect. And I think one of their massive strategies for next year will be how to negotiate better with the workers and with the unions in order to not let this happen again. Because should they not remedy this issue, they're going to have to relook at their business structure in order to prevent this, because of the knock-on effects. And unfortunately, as Peter was alluding to, it's a South African phenomenon that unfortunately makes us uncompetitive.
Peter, can we dig ourselves out of this hole when it comes to our gold miners, or is it really just a slippery slope downwards?
We can dig ourselves out. I won't say easily, but it's not that difficult. We just got to throw the bottle of whiskey out the window and tighten our shirt and say, let's go forward. It's not that difficult. We've got the assets. We got 40% of the world's gold. We got these multi-billion-dollar shafts in place. They can go decades more if we just have the will, the desire. But one of the things Nick pointed out, we've got to adopt best practices, worldwide best practices. You got to run those assets 365 days a year, not 275. And you've got to adopt not mechanization, but modern technology, modern work processes, modern communication processes. And everybody has to join in, unions, government, workers, and company. We can change all this and have a very rosy scenario if we want to.
I think one of the solutions, if they don't sort this out, if they don't address the labor issue, is mechanization. And you know, Nick reckons that within 2 to 3 years you could actually mechanize a mine, which means I think they employ, the gold industry employs what, 150,000 workers. you know, it's very easy for that number to start coming down, and there you have a much more efficient way of actually extracting gold.
Wasn't that what Mampele Rampele suggested? And there was a huge outcry when she mentioned mechanizing the mining companies. This is back to you, Peter.
No, this is nonsense. They've tried, you can only mechanize certain mines, and they've tried trackless, big rubber-tired loaders, dump trucks, drill rigs. They've tried it for 30, 40 years here. O'Keefe was running those in the 60s. If you've got the ore body, you can run it. So it's nonsense. These people are talking gibberish, saying we can mechanize tomorrow, cut the labor force 100,000, increase production. No mine manager in his right mind won't mechanize if it makes the mine safer and more productive.
David, you are speaking nonsense. You are speaking. David is one of those converts thinking that it can be mechanized, but let's leave that situation alone. He feels as though he's been squarely put into his box.